phase.
Pains me to see. So many people are willing to learn how to trade stocks, but are simply just unsuccessful at it. It's not that you're a bad trader.
I'm up $953, $879, $1,300!
When people come up to me and they say, Dek, I'm just not a good stock trader, there's a whole bunch of baloney.
Oh my goodness, I just made $30,000. You guys want to see a show today? 20 grand in a day so far.
You know why I make so much money shorting? Because the answers are given to me.
$37,000. We're currently up 23,000, 24,000 right now. Let's go! This is high risk, high reward. Let's go, baby! Let's go! I'm going for $100,000 today. $100,000 month coming its way, baby.
You may not know everything, but all of a sudden, it's gonna click.
$30,817 in the market today. Oh my goodness, guys. Welcome to the stock market. Do you guys feel it? Do you guys feel that non-copyright, royalty-free music? Do you guys feel the beat of people who make music and make it for free because it's just not that good? Do you guys enjoy it? Now we're getting somewhere. Every morning, tuning in to some free non-copyright music so I don't get a strike. Now we're grooving, baby. Now we're feeling alive. Now the electricity is flowing through my veins. Woo! Yay! Yay! Traders, Let's get ready to go. Let's get ourselves ready to take on this day. Let's get ourselves ready for the man, the myth, the legend, the man who probably only has a few more years left. I don't know. Hopefully not. That was maybe mean to say. But Jerome Powell walking on out. Nice and sturdy and saying to himself, man, let's start cutting some interest rates, eh? Let's start cutting some interest rates. I want that guy walking out, Jackson Hole, multi-hundred millionaire houses and neighborhoods surrounded with them, with a beautiful landscape behind him, coming out with nothing touches his body but a 42-inch long silk suit, and maybe throwing some dead animals on his shoulder. And let's get ready to rock. I want to hear this man say, hey, we're going to be cutting some interest rates. I want to hear this man say, we got a big 2026 ahead. I want to hear this man say inflation has been again creeping its way on down. We are looking good. We are in a good economic state. We are feeling good. That's what I want from this guy. I want this guy again ready to go. I want Jerome Powell bringing the energy. That's what we want to see out of this man here. So, team, I'm excited. I'm excited to see what we have. I'm excited for this day. Now, traders, if anyone does not know what I am talking about in any sort of way, right now here, team, we can see there's not many plays. Now, why are there not many plays? A few different reasons. Number one, it is Friday. Friday, we usually don't have many, again, breakouts, don't have many rips, don't have many runs to begin with. But then on top of that, today is also the day that Jerome Powell is going to start speaking. Now, since today is going to be the day that Jerome Powell is speaking, everyone is sitting back and watching. Now, traders, someone hit me up in the chat room right now. Please confirm with me. What time does Jerome Powell speak today? What time is he coming on out? And what time can we watch this man speak? When is that going to be happening? Does anyone know? It will be happening in about 53 minutes. At 10 a.m., I believe Jerome Powell speaks. 10 a.m. So, that is going to be absolutely awesome. We don't got to wait until 2 o'clock. We don't have to wait until way later this afternoon. 10 o'clock today, Jerome Powell start talking. We could start seeing what the market's going to be doing. We could start getting a little bit of a better idea of what we want to be, focused on. But let's really just get, the understanding of what we want out of today. So let's head on over to Fox Runner. Let's scroll on down towards, of course, the news alerts, and let's see what we have with Jerome Powell. So right here, team, I'm going to make myself a little bit smaller as well. We have Jerome Powell's massive speech today at Jackson Hole. It says Fed Chairman Jerome Powell set to deliver what almost certainly will be his last keynote address at the central bank's annual conclave during one of the most tremendous times in its history. Amid several controversies, Powell could use the speech to at least take a sideswipe at the political distractions, even if he holds the past practice to not take direct aim. The speech is billed at Economic Outlook and Framework Review, indicating Powell will take time to provide his views on broad conditions as well as discuss the Fed's long-term policy goals. All right, traders, what are they talking about right here? What do we have at this moment? Oh, man, this is actually pretty funny. This is actually a little exciting here. Today is going to be Jerome Powell's last big speech. Now, why is that, guys? His term is coming to an end. And as you guys know, Trump and him are not on the same page. Trump says, hey, cut rates already. Jerome Powell says, I don't want to. I don't think it's the right time. You could side with Trump. You could side with Jerome Powell. That's not what this is about. What this is about is that his time as the Speaker of the Federal Reserve, the FOMC, is coming on down to an end. Today's his last big speech on the grandstands right here, in front of the entire world, in front of all of Wall Street. If he wants to, he could say whatever he wants. There's not many repercussions for him. What are they going to do? Fire him? He's already basically getting fired after this. His term ends. Could he say something about Trump? Could he say something about, any sort of controversy? Could he say after, again, the last 4 years of him doing this job, of him being, or last, 8 years of him doing this job? Could he be like, hey, yada, yada, yada. Who knows? I don't know. Jerome Powell goes out with some class, I feel like. I feel like Jerome Powell right here, he's going to stick to his business. He's going to say what he wants to say. He's going to walk on up like he always does. And he's going to say, good morning. Monetary policy, we understand, again, the decisions that we make affect the American families. We try to do our best to be able to calculate what the inflation and interest rates are going to do. We understand that our decisions, again, affect the average American and the policies that they have. Very, again, monotoned. We know that. Me?
Me, ladies and gentlemen, if I was the speaker of the FOMC, Federal Reserve, and it was my last meeting, guys, it would be absolutely incredible. I don't know what we'd do. There would definitely be a band. We would definitely, have some sort of Jello shots. At least, this is me again keeping it very calm at the moment. Definitely, I'm thinking some sort of wrestling. We would get something going. But you know what? That's neither here nor there. Wait a couple more years till I get that position. But the thing is, this is Jerome Powell's final speech here. So he can really do whatever he wants. We will see what he says. We will see what's going to be coming on in. But obviously, what are going to be the main things that we want to be listening for? It says inflation. Inflation remains above the Fed's 2% target, sitting at around 3% based on recent data, partially driven by President Trump's global tariffs. The Fed's preferred inflation gauge, the core personal consumption measure, aka the PCE data, price index, is expected to show annual inflation decline to 2.6% when it's released on August 29th. And guys, that is going to be next Friday. Next Friday, we do get PCE data, which is going to be showing us inflation data, looking for a little bit of a drop, looking for a little bit of a fade. We're also going to be watching the labor market and also current policy rate. The Fed's fund rate is unchanged at 4.25 to 4.5% since December of 2024. Following 3 rate cuts in 2024, markets are pricing in a 70 to 85% probability of a 25% basis point rate cut coming in at September 16th and 17th. So guys, it has been a very long time since we had rate cuts. And of course, what has Trump been wanting? He's been saying, please, Jerome Powell, cut rates. Now, what happens when we cut rates, ladies and gentlemen? When we cut rates, it allows everyone to spend more. When we cut rates, people go and buy houses. People go and buy cars. People go and spend money on their credit cards. People are going to say, hey, I have lower interest. Let me go ahead and take out loans. When you cut rates, it stimulates the economy. When you cut rates, the stock market usually spikes up higher. People are buying shares, buying stocks. Consumers are, again, going out and buying items. Businesses are doing better. So do we want to be cutting rates? 100%. We want to cut rates. But at the same time, guys, we can't cut rates too early. Now, why has Jerome Powell not cut rates yet? Because he's still fearful of inflation. Their target is 2%. They said once we hit 2%, we can start cutting rates. But the thing is, traders, we're still at 3% right now. Now, again, this is a big thing. This is awesome that we were at 9.1%. So a little, reference for anyone who does not know. Back in 2022, inflation hit 9.1%, extremely high. Then we went to 8 to 7 to 6 to 5 to 4, and now we're at 3. So Jerome Powell does not want to cut rates until we're at 2. He says when we're at 2, that's when we can cut rates. That's when I feel good. Right now, we're again expecting that next week inflation is going to be at 2.6, 2.7, right? So the thing is, okay, in September, we can start cutting rates. So at this moment, traders, if we want to take a look, there's actually a 69.3% chance that we are going to be cutting rates. 69.3% chance that we are going to be cutting rates by 0.25% coming on up in September. All right. So again, as we know, what will be the main topic of discussion? Rate cuts. What would make the stock market spike 1 to 2% today? Because on average, whenever Jerome Powell has this meeting, the stock market usually spikes 1 to 2%. Okay? Now, the dovish signal. Powell could hint a 25 basis point rate cut in September, citing weakening labor market data. The confidence of that inflation is moderating. He says the risk to employment and inflation are coming into balance, or that the current rate is mildly restrictive. What would make the stock market crash today? Stock market would crash if, again, he talks about, Powell emphasizes inflation on tariffs, talks about, again, we need more time, we can't cut rates yet. So it all comes on down here today. What is going to be his tone? Is he going to be dovish, which is more positive, optimistic, things are looking good, we're going to cut rates? Or is he going to be more hawkish, hey, we need more time, things are not looking as good as we want, we need to sit back, we need to stay smart? That's kind of what it comes on down to. That's what we're focusing on, and that's what we want to see where that next kind of buying volume, next rip is going to be. All right? So, traders, this is what today is all about. This is what it's all about right here, and that's going to be starting up in about 45 minutes. All right? I am not expecting many other plays to move or spike or rip or run in any sort of way. But at the same time here, traders, I definitely wanted to kind of dive into this a little bit and just see, like, okay, hey, let's get ourselves mentally prepared on what we could be looking at. Now, I do want to throw this out here as well. Today is a perfect day for anyone who is interested in a prop firm. Now, I know, again, this is like the borderline on what you're supposed to say or what you're not supposed to say, and I got that. But at the same time, traders, why is today a perfect day if you guys are interested, or if you are a prop firm trader, if you guys enjoy trading prop firms, if you guys are not, if you don't have a larger amount of funds and you guys like to be able to have prop firm accounts, today's the perfect day for it. Now, why is that? Because on this day, when Jerome Powell speaks at Jackson Hole, we should be seeing the S&P 500 do what? Either go on a massive spike today, up towards around 650, or we're going to see a massive drop today as we fall on down to 620. I cannot tell you which way we're going to go today. I don't know. I don't know what Jerome Powell says. And if anyone says, oh, I do know what Jerome Powell is going to say, they're making that up. They don't know either. But today, what could you do? Well, Dek, I've tried prop firm trading today. I tried prop firm trading my past, and I end up losing during the practice account. What is the cheat code? You guys all know the cheat code. The cheat code is you guys can come on over here to, let's say, One Stop Prop. Go ahead and get how much money you want. Dek, I want $50,000. Okay? You get over, you want a $50,000 trading account. What do you guys know? How does this work? How this works is you have to pass a test, and then they give you $50,000. You have to prove you are a good trader. After you prove you're a good trader, they give you funds in your account. And then again, whatever you make, you get paid out, right? And that's awesome. It's a great way for traders to be able to get, paid on out. At the same time, sometimes traders lose during the practice account. If you guys have ever done a prop firm account before, there has been a chance that you have lost during the practice account. So what's the cheat code? What does everyone do? The cheat code is this. Come on over here, right? And then you would go, okay, let me get 2 accounts. You could type in again, TC30. Right? TC30 is a discount code for 30% off. And then guess what? You get 2 accounts. Buy 2. And what do you mean by buy 2? If you buy 2 accounts, you buy shares on the S&P 500 on account 1. You short shares on, again, account 2. You are essentially sacrificing $230. You will lose 1 account, but the other account is almost a guarantee win. So there's a lot of people who do prop firm accounts, guys, who again sign up saying, ooh, I want to be able to get a free $50,000. I want to be able to have $50,000 in my account. And they pay again $200 and they lose. And they say, all right, let me see if I can pass the test again. And they pay again $200 and they lose. And then they pay $200 and they lose. And they pay $200 and they lose. And they're just always constantly paying and losing and losing and losing. If you do not want to do that, there is the cheat code. It's borderline, however you want to think about it. But this is what a lot of people do. They get 2 accounts on a day like today where we know the S&P 500 is going to be extremely volatile. They buy 1 account, they short the other account. One of them's going to win. And then after that, you're going to pass your test most likely, So if you guys are interested in that, I will again just post this link. You guys can put the discount code TC30 and then you guys will be all set for, again, 30% off. If you guys are a prop firm trader, if you guys want to go ahead and check that on out. Little cheat code today for anyone who has a little bit of a smaller account so that you guys are all set, ready to go. But I know a lot of people do enjoy prop firm trading, and that's the easy cheat code to make sure that you guys are getting funded. All right? Now, Dek, are you allowed to do that? I've talked to, again, One Stop Prop. They said you are. I mean, there's nothing that stops people from doing that. Right? So it happens. So little cheat code there for every single person, little heads on up. Now, what do we want to more be focusing on with this day here, traders? Well, obviously, with, of course, this day, with what we have at this moment, with, of course, what we're seeing right now at this time, S&P 500 is moving its way on up. Are there any sort of big time breakout plays that maybe we can look at the start of the day? Because I'm just going to be frank with you. I'm going to be blunt with you. Every single person is waking up this morning and saying, I'm watching Jerome Powell. I'm listening to see what interest rates are going to be happening. That's the main focus. That's the main idea. People are not going and saying, oh, I can't wait to buy ELAB today. ELAB's a great play. If anything, most likely out of these penny stock trades today, we are just going to see a little spike and then dump back on down. But let's get ourselves at least prepared so every single person is ready for it, okay? So let's see what is the best news of today. The best news of today, let's see what we have here. It says EEIQ. Okay, EEIQ, a 160% gain. what did come on out here, guys? It came on out with an earnings report. So there was an earnings report over on EEIQ right here. It does have a 2025 financial results. You can see this play is currently up at this time. Definitely getting a little hype, definitely getting a little momentum. IXHL authorizes a 20 million share repurchase program. So the company is buying $20 million worth of public shares. Well, if you put $20 million in and buying public shares, the stock is most likely going to be moving on up. So we have EEIQ with a good earnings report. We have IXHL buying $20 million worth of public shares, leading towards the stock going on a spike. So we really have right here a 150% gain and then a 30% gain. If we want to take a look at this, we have EEIQ, which does have the good earnings last night. Good earnings came on out last night. Stock is still trying to push itself on up. And then on top of that here, traders, we have what? IXHL, where this play, again, does have that $20 million repurchase program. But other than that here, team, we do have CYCU. We have, again, MODV. We have LIMN. We have ELAB. Like, some of these plays either had news last night, or some of these plays, again, don't have any sort of news whatsoever. To be blunt with you, to be frank with you, it kind of comes on down to, let's just see what moves at the start of the day. We know EEIQ is the number one top gainer. CYCU, LIMN, MODY, ELAB, IXHL. The only play, though, that actually has a 100% gap up plus is right here, EEIQ, which means it's definitely the hottest play as of now. We go from a dramatic drop of attention from a 150% gain down towards a 39% gain. That's a dramatic drop right there, traders. So when we take a look at this play, we see, okay, everyone is focused. EEIQ has a 150% gain. CYCU is a 39% gain. If you are interested in trading at the start of the day, you say, Dek, I want to get a nice little trade in. I want to make some quick money right here, right at the start. Obviously, you probably are going to want to watch EEIQ just because this play did have an earnings report last night, positive earnings report. And yes, there is a chance because it has the most attention, you could make a quick dollar. Now, you could also say, hey, Dek, I'm going to short this one right at the bell. I think this play is just going to be a quick little spike and quick little dump right back on down. We know Jerome Powell is speaking. We know, again, a lot of the momentum, a lot of the attention, a lot of the action is going to be holding on up. We could also see, take a look right here, team. If you switch over to a weekly chart, 143 is the 200-day moving average. 143 is the 200-day moving average. I might be interested. Just go ahead and look for a quick little short over on EEIQ. Let's see again. EEIQ. Let's see how much shares are to short. If they're affordable, if they're less than like $40, for sure. Let's see. Yeah, at least get shares and be ready for it, right? So let's go inquire all. EEIQ. 6,000 shares. Locate lowest. Let's see what we have here. $177. A little expensive for me, to be honest, right here. Now, again, 6,000 shares, $177 isn't really the most expensive thing in the world. But at the same time, let's just see where this opens. Let's kind of see what it does. Should have very strong resistance, though. Should have very strong resistance at the 200-day moving average right here, or the 200-week moving average, and starting to fade itself back on down. Now, team, we're starting to get a little bit of an idea out of today. We can see that EEIQ is the only stock that's up right now. It's a stock that's up currently 156%. CYCU, MODV, LMIN, these are all plays only up 30%, not really getting a lot of hype, not really getting a lot of action. All eyes, all attention, and all focus is over on the S&P 500 in the next 35 minutes as Jerome Powell is about to walk on out, and we are going to be focusing and watching that. Now, is there anything else that we need to be aware of? Anything else that we got to be looking at here? Let's just kind of go through here. MODV, little press release. No. CYCU had again regained compliance. What I was looking at here, traders, and I wanted to do my own research on this. Has anyone seen this? Has anyone checked this on out? It says Microstrategy make or break is on the horizon. This really got me thinking. Microstrategy is at a decision-making point. What do they mean by this? It says MSTR is a very controversial stock. While some investors say that MicroStrategy is going to be a revolutionary investment, others will say it is a ticking time bomb. All right. So what do they mean by this? Like, what does Fox Turner mean by this when it says perfect dip buy or perfect entry? So for anyone who does not know, okay, let's go over like some of the negativity here. What is the negativity? Why is MicroStrategy so controversial at times? Because the company here, all they do is they put all their money into Bitcoin. So essentially, Bitcoin has to perform well for the company to perform well. Now, I started going over here and I started doing a little bit of research, and I was trying to figure out, like, okay, hey, what is this stock a revolutionary stock? Is it, a Ponzi scheme? So I kind of wanted to, read through this and kind of go through some different things. And I came across this article right here. And again, this is a bear case. This is very bearish. Does not mean it's going to happen, but I thought it was interesting right here. Inside's Microstrategy's Bitcoin pyramid. So basically, what is this talking about here? This is talking, let's kind of go through it here. Basically saying that, this is Michael Saylor saying you have to hold forever. You got to continuously hold. Layer 1, early investors. Layer 2, now layer 3. So basically what we have here is the magic ingredient that makes this reverse pyramid work is the premium. MicroStrategy trades at a 250% premium in its Bitcoin holding net asset value. This allows the company to issue new shares or debt in inflated prices. For the structure to remain solvent, MicroStrategy must continuously raise larger amounts of money from new investors to service existing obligations. The debt maturity schedule is brutal. $650 million is due by 2025, $3.25 billion is due by 2027, and $8.21 billion is due by 2030. That's $1.74 billion just in the maturing debt that MicroStrategy has, plus $205 billion in operational losses. So, if they can't raise new money, this is going to collapse. There has never been a stock or any sort of asset, no asset in history has ever achieved such growth. So basically, this is kind of like going into, like MicroStrategy will collapse. That's what this article is saying. Should every company abandon products and just do what this does? If MicroStrategy is so brilliant, why won't every company just do? Should Apple stop making iPhones and just convert it into Bitcoin? Should Coca-Cola abandon soda products and just, again, convert it into Bitcoin? So it's saying the math shows that this stock has a 100% certainty of collapsing. Now, that's up to you, right? That is up to you. But if you want to, you guys can go over to wherever you want. You can go over to the internet. You can go over to Reddit. You can go over to, again, different blogs. And you can basically say right here, hey, right here, I know MicroStrategy isn't a Ponzi scheme by legal definition, but the mechanics how this company operates have some concerning similarities. Their actual business is basically irrelevant. MicroStrategy, no one cares what they actually do. All they care about is what Bitcoin does, right? It's a perpetual delusion machine. Their debt is continuously selling new MicroStrategy shares. But again, the shares don't have any value. All it is what Bitcoin does. You're paying a premium for Bitcoin when you can just go out and buy Bitcoin. And the whole thing relies on Michael Saylor just continuously hyping it on up. So guys, what do you guys think? Is MicroStrategy a good play? Or again, is it going to be a bull? Now, I know I just spoke very negative about it over the last 2 to 3 minutes there. Now, why is this even here? Like, is Fox Runner saying, oh, it's a scam? Is this bad? No, it's not saying that in any sort of way. It's saying that is this a perfect dip buy or a perfect short entry? I'm the one saying there is a lot of negative talk about it. Now, why is it being alerted, though, today? That's the big issue. Why is it being alerted here today? Because this is the first time it has cracked its 200-day moving average since 2023. So if you guys take a look over on MicroStrategy at this moment, okay? This is the first time since 2023 that it's underneath the 50-day moving average, the 13 EMA, and the 200-day moving average. Every single time in the past, and you can go all the way to 2023, it's bounced, massive run up, it's bounced, and again, now right here, we're actually underneath it. We're underneath it and holding it. So again, go back to a weekly chart. If you go back to a weekly chart on MicroStrategy, what do we have? We do have, again, perfect bounce. We have perfect bounce, and right now would be technically the perfect bounce. So again, this is not saying, we are not sitting here and saying MicroStrategy is a Ponzi scheme. I want to show you that, again, there is a lot of haters on MicroStrategy. There's a lot of negativity on MicroStrategy. There's a lot of math that does not add up on MicroStrategy. At the same time, there is a lot of love. There's a lot of people who say, again, this is, people don't understand it because people don't understand Bitcoin. Hey, people talk bad about it because they just don't get it. It'd be like, again, buying Bitcoin. So the thing is, MicroStrategy was the first company ever to basically do this. Say, hey, we don't care about our company. We're just going to do it on Bitcoin. Now in 2025, how many other plays did you see do this, guys? If you have been trading with me, we see a penny stock do this nearly once a week. Says, hey, we're a biopharmaceutical company. We're selling all of our equipment and we're putting it into Ethereum. We're selling all of our equipment. We're putting it into Solana. We're selling all of our equipment. We're putting into this or that, right? How often have we seen that? We've seen that a lot. Now, if all of a sudden MicroStrategy did start dumping, if all of a sudden MicroStrategy does start getting weaker and can't hold on up and things start falling apart, all of those companies are also going to fall apart as well. So is today, is this week, is next week, is it the perfect dip buy over on MicroStrategy? Or is this the start of the actual collapse where MicroStrategy is going to go from, again, where it was 450s and start going all the way down to 200 and start going all the way down towards 100, as for the first time, we are not seeing bullishness. And for the first time, we're starting to see bearishness. So, something to be aware of. Something to be on top of. Some people might say, Dek, today's the perfect day to enter. Getting in right off this move, we're going to see some green candles. Some people are going to say, Dek, no, this is a time to short. It's up to you. But again, we want to at least bring it to your attention. Come up with your own game plan, right? Come up with your own game plan. Come up with your own ideas. And of course, what you might want to do on that play. Dek, what do you think? I mean, to be honest with you, I'm thinking more of a short. I mean, whenever I see a play crack, it's a strong indicator that hasn't cracked for years. I mean, that's pretty big. Also, I'm not the biggest fan of MicroStrategy either. But, I want to kind of throw that out there. So right now here, traders, I want to see what we have. EEIQ, a little bit of that pop right at the start here. Guys, EEIQ, remember, this play definitely going to be hot right at the start. If this play goes underneath its weekly moving average, that again, 143 mark, has a lot of room to fade, fall, drop, and get weaker. EEIQ here, traders, let's put this on the top level too. Dek, how high could this go? If this stock ever did start continuously spiking, I mean, next strong resistance would be like 179, 180. So it's going to have a lot of strong resistance in the 170s. I'm just trying to take a look at the past, followed by if it could ever get all the way up towards 220. I mean, 220 would be like the main area. 220 is the best area I could see. I will say I will 100% short this if EEIQ can get near $2. You guys can see 220 hits and falls, 220 hits and falls, 220 upper shadow, 220 upper shadow, 220 upper shadow. I don't know if it's going to get to 220. That's kind of a far area for a stock that's $1.50. I know that seems kind of close, but it's not really. I mean, that's still a good percentage move. If it could ever start getting above $2, I would 100% short this play. If you're saying, Dek, I don't think it's going to get above $2, I would say, again, just say to yourself, oh, EEIQ, you can start shorting now. And if it starts going underneath 143, you can start making a lot of money. So definitely keep your eyes peeled. Stay alert. Stay ready. EEIQ, trying to hold on up. MSTR right now. MSTR, as we know, that's a big play here today. Big play here. I kind of want to go back to the daily chart. Actually, I want to go back to a daily chart, see how many, if we've had any sort of, nice green days. Nice green days. I mean, so far, MicroStrategy has gone from 400 down towards around 334. I wouldn't be shocked if we maybe got a little test back up towards around 350. Part of me does want to short MicroStrategy. I'm going to be blatantly honest with you. To short it, to do a put contract, 2 to 3 months out. Because to be frank, if all of a sudden we start kind of losing the floor and momentum on the negative side starts picking on up, guess what? There is nothing to hold it. There is nothing to hold this play. This thing could absolutely fall apart, start dumping, start getting weaker and weaker and weaker, and even if you say, oh, it's not a scam, it's still underneath its indicators. So the thing is, you can definitely start getting more bearish. That could be a big short in the near future. A little heads up for everyone. So right here, team, keep my eyes peeled on everything. BBAI, like that one for the future. S&P 500. Again, S&P 500, if this one spikes on up, it's most likely going to come right back on down. Just being honest with you. If this one spikes on up, it's most likely going to be coming right back on down, most likely going to be getting some weakness. We still got about 25 minutes until Jerome Powell speaks. Now, traders, while we have 25 minutes, I do want to throw something on out there. on what is out there, everyone. As you guys know, I've stated this a bajillion times already, but yes, I am going to state it one more time right here and right now. Monday is the biggest Monday of the year. You might say, what's going on here? This upcoming Monday, we are starting off our summer boot camp. A to Z, 0 to 100, Monday to Friday. If you are a trader and you are saying, Dek, I need to learn everything I possibly can. I want to know how you learned how to trade stocks. I want to become a full-time stock trader. I want to be able to get the education to be able to help me get to that next level. Monday through Friday, I'm going over it all. I'm not wasting your time. It is going to be 2 hours every single day, 9 to 11 a.m. I am going to go into as much depth as I possibly can over the next week, going over fundamentals, strategies, technical analysis, indicators, reading tools, how to set up a broker, how to use your broker, limit orders, market orders, support, resistance, chart pattern setups, being able to understand psychology, mob shifting, all of it. We are going into the full breakdown. What I have gathered over my last 10 years of stock trading, we are going to be doing it in 5 days. So it's going to be definitely heavy. It's going to be action-packed. You might feel overwhelmed at times, and that's absolutely okay because I'm going to record it and give it to you guys. But yes, Monday is the day. Now, how do you have access to the summer boot camp? You have to be a member over on Tradecaster. So, Tradecaster just dropped all of its prices, as you guys know. So, Tradecaster has never been this cheap, ever. So make sure you guys come on over here, sign on up to a free 7-day pass, and make sure that you guys are all ready to rock. Make sure you guys are all ready to go. Make sure you guys are all fired on up right here. I am super excited to be able to, of course, be able to teach you guys. But yes, all of Tradecaster prices are officially dropped on off. So we used to be, again, $174 a month. It's now only $79 a month. So guys, come on over here, get yourself the brand new pricing. All members, you guys are already good, but if you are not a member, you have to sign up right here and right now. Tradecaster have access to, again, the boot camp on Monday. Let's make sure we do it. All right? I am absolutely so excited about that. So yeah, we went from $174 a month to $79 a month. I said, hey, you know what? I don't want to do this. I don't want to charge this much. You guys show me so much respect being here every day. I want to cut down prices. So cutting down my prices. I hope, again, you guys realize how much value I'm giving, how much time I give. And again, I want to make it affordable. I don't want to make it, I don't know. I want to be with Dek, but I can't, again, afford it. I don't want that in any sort of way. If you want to work with me, you can work with me. It's $2 a day. So let's get after it. Let's have some fun here. Right now, team, getting ourselves ready to rock and roll for a big time ahead, for the future here. Darren, Dek, Microstrategy is pretty well linked to Bitcoin. People are expecting that, again, we start getting a big pump in November and December. We usually do see a big pump in November and December, but what's with September? September is the worst month of the year. So the thing is, we are most likely going to fade and fall on the S&P 500 in September. It happens every year, which is why this is also a little bit scary today. Today could be the kickoff to September trading. If Jerome Powell says negative things, guys, we are going to see this entire market start fading and falling, and September is going to fall perfectly in effect, aren't we? September is going to start getting real ugly if Jerome Powell walks on out and says, hey guys, things are not looking good. On average, we know on average, the average return on September is nearly a 1.55% drop. Is today going to be the start of Jerome Powell walking on out and saying, hey, things are going to get ugly? Now, obviously, if the S&P 500 gets ugly, we know Bitcoin gets ugly, MicroStrategy gets ugly. That's just the way it works. So we can easily see the ugliness coming on them in the near future here, team. EEIQ, guys, quick little spike and quick little dump. Ugh. Guys, look at that. EEIQ halted on the downside. So EEIQ traders, if this one does spike its way back on up, where is it going to try to get up to? Probably right around that 147 mark, but I'm going to be honest with you. Where most likely is this play going to try to pop back up towards? We have strong resistance right around 142, 143. EEIQ, 142, 143, EEIQ, this play right here, a lot of room to feed, a lot of room to get ugly, a lot of room to drop. 142, 143, that is going to be tough to be able to break through. Okay? To do little heads on up, we do have Jerome Powell's live stream here. So this is going to be coming on out. I will not be able to stream this over on my stream. I can't streamception it. I can't do a stream with a stream within it. Or again, I am going to be getting some sort of like, blockage. So I'm going to just post this link for every single person right here so that you guys are all set. Thank you to Zach Copper for posting this. And again, we will watch it together, but at the same time, you will have to watch it on your end. Okay? So you will have to watch it on your end. I will not be able to kind of play it out loud or I will get in trouble. Little heads up. So I'm just kind of posting that over in the chat so that you guys have that so that you guys are all good. Okay? I'm also going to just post it over on Twitter, StockTwits, Discord, Instagram so that you guys have it and you guys will be all ready to rock. All right? So that will start on up in a little bit. That'll start on up here, team, in a little bit. Right now, EEIQ. EEIQ is live. Let's see if EEIQ can get that little bounce back on up to 143. We got 19 minutes. 19 minutes until Jerome Powell starts on speaking here, team. Let's see. Keeping our eyes peeled, staying alert. Now, again, Dek, you're going to start shorting MicroStrategy right now? No, again, because I want to see what Jerome Powell says today. Let's say, like, if all of a sudden the market does great today, we got to just be aware of that. Also, traders, I already gone over. Today's, again, a big day if you guys are a prop firm trader. If you guys are interested in prop firm trading, today is an easy day to pass your account, especially if you have 2 accounts. If you have 2 accounts, today is going to be one of those days. Now, traders, let's take a little bit of a poll right here. All right? Let's take a little bit of a poll right here at this moment. So I'm going to set this on up. Let's set up a poll underneath the live stream and let's do this. Okay? So let's go with, will JP pump or crash the market today? What do you guys think he will do? Jerome Powell, JP. Today, his remarks are going to pump up the stock market. Today, his remarks are going to crash the stock market. I'm going to set up the same exact poll over on YouTube. Will JP pump or crash the stock market today? So, what do you guys think? Pump or, again, crash? Everyone over on YouTube, you guys can go cast your vote right now. Everyone over on Tradecaster, you guys can scroll underneath the live stream or click this little, again, poll button in the top right-hand corner. If you click this poll button in the top right-hand corner, you guys will also get it as well. That's right there. Or you can just scroll down underneath the live stream and you will be able to see the poll button as well. Let's give everyone a few moments here. Everyone, go after it right here and right now. What do you guys think? What will happen today? Will Jerome Powell pump the market on up? Will Jerome Powell again short the market on down? Let's see if there's a difference between, again, YouTube. Let's see if there's a difference between Tradecaster. Let's see what people are thinking. I am giving everyone until 9:45 to go ahead and cast your vote. So let's see here, team. Everyone go ahead and do that. I want to see if there's any difference. I want to see if there's like a heavy majority on one side. I want to see what people are thinking. So is there going to be like a heavy majority towards one side or not? All right, here, team. Give you guys about 30 more seconds on both sides. Traders, right now, there is no help at all. And now what do I mean by there's no help? Team, take a look over on Tradecaster. On Tradecaster at this moment, will JP pump or crash the market? It is 46 to 54. It's almost a coin flip. It is literally almost a coin flip at this moment. So 48 to 52. All right, guys. Everyone cast your vote if you guys have not yet. In 5, 4, 3, 2, and 1. Stop the poll. Over on Tradecaster, 56% of the chat room, a very small amount of traders, says that Jerome Powell is going to crash the market today. It's not going to be good talks. 44% say it's going to pump the market on up, and it will be good talks. Let's see over on YouTube. On YouTube, we're going to end this in 5, 4, 3, 2, and 1. And over on YouTube, 52% of the chat room, guys. 52. So it's a 50-50 on basically both of them. So what is that telling us? It is telling us that no one has any idea. It is telling us right now that no one has any idea. No one has any, no one knows. No one knows what's going to be happening here. No one has any idea. Right now, team, S&P 500, we are 15 minutes away. Look at the SPY, though. So S&P 500 going on a little bit of a rally right here. Anyone think we're going to have a little pullback, though, before we come on out? J Beans, a deck, I think he crashes it. Trump fires him. Then at noon, the stock market goes to the moon. I mean, hey, we'll see what we get. Obviously, there's so many things that could happen, so many variables. We could see the S&P 500 go on a big spike. We could see it go on a big-time dump. We could see weakness. I mean, traders, really comes on down to what you want to do as a trader. A lot of people are going to be looking for options. Deck, I'm an options trader. Today's a great day for options. Today's a great day for options. It's a great day for your prop firm. It's a great day just to go ahead and buy some shares if you guys wanted to. Traders, is there any smaller ETFs that maybe, again, you would want to buy? Is there any smaller ETFs that some traders are going to be looking at? Off the S&P 500, isn't there like, SPYX, different like smaller, ETFs, just like, SPYX. Deck, if the market goes on a very big spike today, I can't afford the S&P 500, but I can afford SPYX. That's, again, a much smaller ETF that's going to do exactly that. Well, Deck, if, again, the market pumps, most likely Tesla's going to pump. You could buy TSLL, right? That's a much smaller version of Tesla, only $12. Okay, I could buy that with shares. There's smaller ETFs that you guys can buy as well that could definitely go on nice rips and nice runs. UPRO. UPRO is, again, a smaller version of the S&P 500. Pro shares, right? Zach Hopper loves this one, where, again, it's the S&P 500, smaller version of it. And, again, you guys can go ahead and buy this if you guys are interested on it. So it all comes on down to what do you think is going to be moving? What do you think is going to go on a big spike, big rip, big run? UPRO is the best high leverage long S&P 500 ETF. Woo! I like it. Guys, only 13 minutes away. 13 minutes away from Jerome Powell. 13 minutes away until we get this man speaking. 13 minutes away until we're all good. 13 momentos. 13 momentos. So yes, 50% of the chat room is spot on. How does that sound, guys? 50% of the chat room is absolutely spot on. The other 50% of the chat room has no idea what's going to happen. 50% says the stock market's going to go up today. 50% says the stock market's going to go down. Guys, I just want to say congratulations to the 50% that's correct. So again, to the 50% that's correct, congratulations. The other 50% that's incorrect, you guys got to study more. It's your fault. You didn't study hard enough. EEIQ. Waiting and watching, seeing what we have here. Final, again, 10 minutes left in this day. Obviously getting ourselves jacked on up on this day. Woo! It's going to be good. Also, one of my favorite plays, Palantir. Let's see what happens over on Palantir. Palantir is also kind of like near that Microstrategy, dip buy opportunity. Now, obviously, much different plays. One has to do with AI. One has to do with cryptocurrency. One has, again, government contracts. One is, again, just following Bitcoin. Completely different. But what I'm referring to is the fact that Palantir is sitting at its 50-day moving average right now. Is there a chance that Palantir gets that perfect little dip buy, boink, right off again the 50-day moving average, comes on down, boink, gets that perfect little, again, moving average? The thing is, when you guys are taking a look over on Palantir here, you guys can see we have now fallen from 190 down to 154. Is this the perfect dip buy opportunity? Just like when you take a look over on MSTR right here, and you guys switch on over to a weekly chart, is this the perfect dip buy opportunity? That's the very big question we need to ask ourselves. Because to be frank with you, this right here is how I have all of my perfect entries. The S&P 500, I bought in, as you guys know, on the S&P 500 at the 50-month moving average. I jumped in on Monday, April 7th because of boink, 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 boink. That's it, guys. If you're boinking your whole entire life, you are winning. So the thing is, the S&P 500, all I'm doing right here is watching the boinks and bouncing off these areas. Now, right, that's how I was able to get so many great entries. But at the same time, we go over towards, the S&P 500, or we go back over to MSTR. Is that the perfect entry, or is that before the collapse? If we take a look over on Palantir, 13 EMA, is that the perfect entry, or is that the collapse? Right? So it's like, there's a lot of plays right now, and I don't have the answers. I'm not going to sit here and act like I know the answer, but I will say there are a lot of trades right now. There's a lot of potential where these stocks could easily do what? These stocks are easily going to have the perfect dip buy or the perfect short. Right now, 9:51 in the market, traders. 7 minutes left. We all have that link for Jerome Powell's speech. And we will see what we get. As you guys know, one of my favorite plays I'm keeping on the back burner right now is BBAI. BBAI, I would like to be able to grab that play near the 200-day moving average. One for, again, a long-term investment play. Long-term investment over on BBAI. If I could ever get that one back on down sub $5, I would definitely look at it. So, again, that's, one of my plays that I'm creeping on up towards. So, like that one for a risky long-term investment. It's basically like a baby Palantir. We've talked about AI, artificial intelligence, very hot trend. But now, again, it comes up as we're getting into the end of 2025, as we are getting ready for 2026. We need to ask ourselves, where is buying volume going to go? Buying volume, guys, is heading towards AI defense. The big, beautiful bill released trillions of dollars to its military, trillions of dollars to defense contracts, trillions of dollars to border crossings, and making sure, again, we have the United States being protected. That's what, again, the big, beautiful bill was a lot about: military, space, things like that. So we have trillions of dollars coming towards those different companies. Make sure you guys do your research on them. Little heads on up. EEIQ still trying to spike its way on up. All attention and all focus is over on the S&P 500. Remember, you guys can look to be able to buy UPRO if you guys are interested in a smaller version of the S&P 500. Make sure you guys are all set, ready to go over on your prop firms. As I said, and I'm going to say it one more time, today is a perfect day to go ahead and use the strategy on prop firms. Dek, I want a $50,000 account. I don't have $50,000 in real life. What do? Go over here. Type in, again, TC30. If you type in TC30, you're going to get 30% off, which is great. Guess what, guys? You now get, $99 removed. You buy 2 of these accounts. Buy 2 of the accounts. One account, you buy S&P 500. The other account, you short S&P 500. One of the accounts is most likely going to win. Not guaranteed, but most of the accounts is most likely going to win. Guess what happened? Bada boom, you just passed your test. After you pass your test, next week, you'll be all set, ready to go with a $50,000 account, and you can actually start making money. Now, if you lose it from there, that's obviously, again, on you, if you lost it from there. But I will say, a lot of people like to kind of do the cheat code on prop firms. I don't want to waste money going and doing practice test and losing, practice test and losing. Again, I don't suggest doing a practice test and losing. Buy 2 accounts, sacrifice one, you win the other, and at least you're guaranteeing yourself that you're going to at least, get that $50,000. So let's see what we have here, traders. 5 minutes until Jerome Powell comes on out here, team. Jerome Powell coming on out here in a little bit. Let's also see this. Any sort of big investments that have been going on here recently? Let's see if there's been any sort of like insider purchasing, anything big recently. Let's check out. Let's just check out Nancy Pelosi. Has Nancy Pelosi bought anything recently? She bought AVGO back in July 8th. This was her last investment. So Nancy Pelosi, guys, little heads on up for anyone who does not know. She does option contracts, but she doesn't do them like you do them, you degenerate. How do you do them? Oh, Dek, I do 1 day expirations. Oh, I do 1 day expirations. I get a little crazy sometimes. You know, so again, a lot of these congressional traders do not do the same day expiration. Does not do Friday expiration. What Nancy Pelosi does every single year is she does 1 year out. She does 1 year out contracts. So she bought AVGO on July 8th. She bought anywhere between $1 million to $5 million. All right. $1 million to $5 million on July 8th on AVGO. Let's see how that one's been doing since. So July 8th is going to bring us right here. She bought in right around 272-ish. 272-ish. It's at 292 right now. So this isn't up ginormous, but it definitely went on a nice rip. It definitely went on a nice climb. It definitely went on a nice pop. Anything else she got in recently? No, she hasn't gotten in anything else recently. You know, she got in on Nvidia. She got in Amazon. She got in on Google. She got in on January 16th over on Nvidia. Let's see where that was at. Nvidia. Where is that at? January 16th. So she got in 133. She got in right around $133. I mean, it's at $173, and that was one of her biggest positions. About $500,000 on Nvidia. So she's still sitting absolutely pretty right there, right? I kind of feel good about it. I feel real good about my trade. I'm in at Nvidia right now at $91. So again, I'm in at Nvidia at $91, $92. So I'm happy with mine. Beat Nancy Pelosi. Ha! Take that. But yeah, that AVGO was her most recent. Let's see if there's anything else getting kind of like some big. Let's just go to buy orders right now. Let's see if anyone's doing any sort of buy, or let's do buy orders for large amounts of money. Democrat, Republican, doesn't matter to me. So let's see what we have here, guys. Buy orders for over 500,000, 500,000 and more. And what do we have? Nvidia, AVGO, Nvidia, Microsoft. Nah, all boring plays. All right, I thought there would be something maybe a little cool, you know? What's this one? LBRDK. LBRDK, what is that? LBRDK. Liberty Broadcom Corp. So this investor, when did he buy though? John Hippocock bought June 12th with about 500,000. He bought June 12th. All right, well, John Hippocock is in some serious trouble. This guy bought in June 12th. And it got absolutely wrecked. Okay, so not the guy we want to follow. John, I'm sorry, we're not following you. You are, again, getting absolutely wrecked on your LBRDK trade. Let's stick with Nancy Pelosi at this time. Dek, when's the launch date for the new version of Fox Runner? I mean, I don't know if there's a new version coming on out, but I do know they are having a big update next week. So next week they have an update coming on out. Some new stuff. But Fox Runner, I use it every single day. I think today is the last day as well. Traders, little heads up for every single person. Today might be the last day that you guys can get 30% off on Fox Runner. So just a heads up, if you guys do not use it, that is what I use every single day. It is literally, again, the best scanner I know. Trade ideas, Fox Runner, absolutely beautiful, absolutely awesome. Make sure you guys go ahead, check that on out. Use the word Foxy and you will get 30% off. You guys will be all set, ready to rock. Jerome Powell starts speaking. Go over here, Humbled. Lobbying is like weird. Lobbying is the act of attempting to influence decisions by officials in a government. Most often legislators and regulators on behalf of a group of an individual. So I usually don't look at that too often, but I do know they have it here. What is it? Data sets, government contracts. So there is government contracts right here. And then if you guys go over to data sets and then go to lobbying. Again, I don't really look at this too much, but at the same time, if you guys are into it, lobbying, you guys can see there is a whole bunch of lobbying information here. I want to see, is there any government contracts? Search by symbol. Palantir. So Palantir, you can see all the government contracts they get because they're government based. BBAI? Nope, they don't have any right now. Okay. All right, guys, we got to start looking into this Jerome Powell stream. Woo! Guys, people getting a little excited. Jerome Powell starting on up. Jerome Powell starting on up here, team. Look at this. We haven't even started yet. Team, we haven't even started yet, and people are getting themselves a little too excited over on the S&P 500. So, no, we have not started yet over on the S&P 500, or on Jerome Powell, but this thing is already getting hot. Here's the link again. Look at this. Team, are people just saying, I don't care? I don't care that Jerome Powell's not even speaking yet. I'm buying. That's what we're seeing right now. I don't care that Jerome Powell hasn't even come out yet. I'm buying. That's what we have at this moment. Is he speaking? Let's see here. Right now, traders, this one is not even here. This one is live, though. Is this an old link? Right now, 11,000 people are watching this 2 hours ago. Can we get a live link here, team? Is this the correct one? This isn't even at Jackson Hole, though. This isn't even at Jackson Hole. This speech at Jackson Hole, Wyoming policy meeting. So, guys, here's the link. You got to listen in on your end. Unfortunately, I can't show this. So I cannot say this out loud, or I will get in trouble. Little heads on up. But you guys can see there is live right now. It is live. I posted the link. So everyone listen in. I'm going to shut up for a little bit.
decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations, to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
Thank you very much. We'll move into the presentations, so I want to allow a minute for all of the members of the press to go.
Uh-oh. All right, team. So what are we seeing here? What are we seeing at this moment? S&P 500, 638, spiked on up to 645.55. That is where we got up towards. Right, we went all the way S&P 500, 638, spiked all the way up towards 645.55. Now, the thing is that I want you guys to be able to understand is that we are right next to our record highs, right? We are continuously keeping our eyes peeled, watching to see, can we be able to hit these brand new record high areas? The S&P 500, what is the highest we have ever been? The highest we have ever been is that 646.19 area. That's the area we're looking for. Today, we got up to 645.55. Now, traders, there's a couple big key points that you guys need to understand here. Is that over the last 96 years, we usually see the S&P 500 have a very nice red month in September. Over the last 96 years, the S&P 500 on average gives away a 1.55% drop. 1.55% drop over on the S&P 500. Today is what we have right here, August, Friday, 22nd right here. If we take a look at the 22nd over in August, it is slightly green. And then as you guys can see, we do start going a little bit red, into some more green, into a whole lot of red. Now, I don't know how you guys specifically want to play this, or if you guys want to jump in, or what you guys want to be doing. But I just want to make sure that we are all aware that the S&P 500 was about 70 cents short of hitting a brand new record high. Brand new record high prices. How high do I believe we can go today? With Trump now speaking at 12 o'clock, with Trump coming on up in the next 90 minutes now, we can see the S&P 500 continue to push. We can see the S&P 500 continue to rip and run. We can see the S&P 500 go up even higher and higher and higher. The best area that I think would be a great top would be like 649, 650, 651. I think that would be a great area for some top resistance. I think, again, that 650 mark would be a great area to be able to say, hey, this is the top before we statistically start speaking about 1.55% dropping. So traders, we know what's coming. We know we are only a week away until we head in September. We know that we are going to see red in September, and now we are trying to get the highest point possible before that reversal. So I do not know if today is going to be the exact high. I do not know if next week is going to be sometimes the exact high. But what I will say is please study this chart. Please study this chart, guys, because it literally is going to help you get the answer. It's going to be straight up with you. Now, if you guys don't believe this chart, just go over the last 10 years. This is the last 96 years. Someone show me again the last 10 years at least. The last 10 years we see is right here. The S&P 500 monthly performance over the last 10 years. We can see July, incredible month. September, awful month. October, great month. November, incredible month. 10 years of data. September's red, 2.3% drop. 96 years of data. September's red, 1.55% drop. Let's use our heads. We're sitting next to the record highs. The S&P 500 is looking for a new high. If we start seeing 647, 648, 649, 100%, I'm going to start looking for some shorts, and I'll hold it probably for 30 days or so and see if things are going to keep on fading and falling and dropping. So I hope Trump comes on, 12 o'clock, says some stuff, and we start going up to 648, 649, 650. I hope maybe over the weekend people digest the comments. It gets people a little bit more excited. And again, we go up to 648, 649, 650. And then we are getting great entries for what is going to be coming up over the next 30 days. I want to prepare you guys. I want to make sure every single person is set, ready to rock, ready to get after it, ready to have some fun, and ready to truly be able to make some money. Team, the S&P 500. It seems like we're in a small little head and shoulders pattern. Might go back down to 642. In the next 90 minutes, we do have Trump. He is going to be speaking. But as you guys can see, there's a lot of volatility. I'm telling you the game plan that I like. The game plan that I like is let the market climb. Let it get up to 648, 649, 650, and then look for probably a month-long short. A short over on the S&P 500, a short over on UPRO, a short over on NVIDIA, or again, a top gainer on like the top 500 companies. Look for maybe Microstrategy on a short. That's something I'm very interested on as well. That's my strategy, looking to see what we can do. Now, as you guys know here, traders, it's 10:30 at this time on this Friday. I do just want to say, for every single person who has not yet, make sure you guys come on over here to Tradecaster. Monday, we are kicking off our 5-day summer boot camp. It is going to be intense. It is going to be a lot, and we are going to be going over everything I know in stock trading over the next 5 days. I'm not going to be trading much over the next week. I'm going to be teaching. So if you are someone who says, Dek, teach me everything you know, teach me A to Z, teach me 0 to 100, get me a full-time stock trader, next week's the week that you want to be on Tradecaster. So I just dropped the link for you guys so that you guys are all set. If you guys have not signed up yet, you have to sign on up. Take advantage of it. Let's have some fun. Let's go from there. Other than that, I do just want to post a few other links before we get ready to wrap things on up. You guys, number one, if you guys like my charts and everything I have right here, you guys can get my trade idea scanners. Trade idea is absolutely beautiful, absolutely awesome. Make sure you guys go do that. Also, on top of that here, ladies and gentlemen, you do have your Foxy. Foxy is 30 days off and 30% off over on Fox Runner, which is the new scanner. And again, hearing some great stuff over on the AI Trading Journal. So if you guys want a free 14-day pass on the AI Trading Journal, make sure you guys go ahead, check that on out so that you guys are all good, ready to rock and roll. But I do think the S&P 500 is going to run on up towards around that 648, 649 mark. Scanners are up. Ladies and gentlemen, what a week we've had. Going live for you guys throughout this week, helping you guys grow, making a little bit of money. I'm not going to sit here and say we made a ton of money. We didn't make a ton of money. We made a little bit of money, but it's just that last week of August coming. And then guess what? We got big volatility. We got big hype. We got big action. We got big momentum. As always, ladies and gentlemen, every single person here from Twitter to X to Tradecaster to Discord to Instagram to wherever you guys are watching and enjoying it, I just want to say you guys are fantastic. I love working with you. I love, again, teaching you, and I love helping you guys grow as a trader. As always, if you need anything at all, please email me at dekmartrades@gmail.com. I will see you guys on Monday on tradecaster.com for the summer boot camp. Watch the S&P today to get up towards around that 648, 649 mark. Trump is going to be speaking in the next 90 minutes. Ladies and gentlemen, absolutely everyone, help me wrap this thing on up. You guys know the drill here, baby. Let's do it, team. Happy Friday in 3, 2, 1. Summer boot camp starting on up in the next 3 days. I will see everyone back here bright and early on Monday morning. Let's get ready to rock. Let's get ready to do it, and let's get ready to have some fun. Thank you so much, traders. I'll see you guys back here Monday morning getting ready to make that money. I'll see you then.
Did you make money today? Did you make a profit today? Did you come out on top today? I'm the Batman.
I got this question the other day. Why are you successful?
So I ball so hard, motherfucker.
$1,000 profit today.
The first niggas gotta find me.
$700.
50 grand to a motherfucker like me. Can you please remind me? Ball so hard, this shit crazy.
$1,000.
Y'all know that don't shit phase. And as we go,
Lock it on up.
too when I look at you like this shit crazy. Ball so hard, this shit weird. We ain't even pro be here. Ball so hard since we
1,400.
here. It's only right that we be fair. So
Who's
go.
ready for a $1 million year?
You should be asking how to be successful.
Jackson, Tyson, Jordan, Game 6.